Alan, what do you think about this crude sell-off around the EIA?
Well, it's stalled at this level. This 57.5 level is where we've been stuck here for the last few sessions. It's been essentially a straight-up move off this bottom, and this is the halfway point of the drop that we had from that fake-out breakout where we got up to the 62 and change level, then it sold down to 52. So we're at a key pivot point right now. Let's see if it can punch through. But for me, crude oil is more about the macro market than anything else.
All right, so now you've got this move that took a little bit of a setback because crude had been trying to get some momentum to break out of the range that's been stuck in for a while. Tell me what you mean by the macro side. I mean, do you think crude's responding to some of the trade hiccups that we're seeing in the stories breaking?
Well, today we're seeing quiet calm in the markets once again, if you look at the stock market. And what we've seen here recently, and I mentioned it before, it's hard for me to say it, in 2019, we've seen signs of stability and certainty. And we've seen how the stock market obviously has had that full V recovery in the S&P, and we've seen how treasuries have stabilized as well. They had that free fall, and then they had that bounce where yields had gotten to near 2% again in the 10-year note. So that's another sign of stability. Crude oil has been lagging behind as far as its concerns still remain about the global growth story, but I think with the stock market leading the way and Treasury stabilizing, that could be the next, the third leg in this stool, that you could see crude continue to drift higher and test that 60 level. Again, we've been between 50 and 60 now for many, many months, and if it breaks out of that, then we could see another run to 70, which would not be unforeseen. Let's remember the overhang of this Aramco IPO, that there are a lot of people, a lot of serious people that need to see crude oil move higher.
I like that. A lot of serious people. I'm with you on that. Alan, let's come back to this point about the last leg of the stool, though, because I think this is really important. What we've had is stocks going to highs as volatility drops, bonds selling off since September, gold selling off. We'll take the last couple days, and just put them on hold for a sec, because crude oil has not taken part in that vote of confidence in the global economy stabilizing yet. So your point here is if it starts to move.
That's the point.
Okay, so help our viewers understand at what point, at what dollar price does crude's upside become impressive to you and inform that third leg of the stool?
Well, for me, I'm leaning on this 55 level. 55 is the halfway point between the 50 and 60 that we've been stuck in. So that's what I'm looking to watch on a weekly basis. We've been able to hold above that. I'd like to see a secondary move above these recent highs to take out that 58 and then make an attack on 60. The reward to risk is definitely on the bullish side for crude oil. And look at so many energy and so many resource stocks, for that matter. So many energy stocks are set up for a little bit of a bullish bounce. They've been forgotten, and the short interest, there could be a squeeze on a lot of these type of stocks. Look at something like a Halliburton. That we form these bottom bases, and I think you could see some catch up in those stocks as money flows start to look for sectors and stocks that haven't participated in the overall rally. You're going to see that snap back in some of those downtrodden stocks, I would say. Yeah. All
right. We'll be keeping an eye on it. Let's talk the other side of today, which is, of course, equities gain a little bit of steam towards the end of the close. I mean, VIX just totally quiet. And so, Alan, are we getting just, trade headline, nausea? We don't really care about this stuff. I didn't really see anything in any of these headlines that seemed that new to begin with.
No, it's the same old, but I think we're getting a little bit more immune to the headline risk, because we know, overall what it means. There used to be some sharp reactions to things that were out there. Now I think that they're more muted. People are able to look longer term. And to get back to the VIX is stuck now for 3 weeks now, trading between 12 and 14. Right now we're right at 13, so we're at the midpoint of that level. But what's most important for me is I don't think we're that complacent, even though it does feel a little complacent. I think just because we've always been on the knife's edge for the last months and I guess years. Mm-hmm. But the thing is that when the S&P continues to make these new highs, the VIX is nowhere near, not even the 2019 lows that are down around the 11 level, but the 2017 lows were below 9. So there's a lot more downside more in the VIX, which in my terms means more upside in stocks. 3,500 is that S&P target that we talked about a long time ago. that 600-point sell-off from that top, that drop from the top, you add on top of that old high, that's the technical target. And, it's happened every time in history so far.
Now, the VIX move, like I've said before to you, the VIX move below 12 meaningful would definitely be an important break of the post-Jan 18 trend, right, where that floor has basically been around 12.5 to 13. Alan, we had a guest on the other day, Dave Floyd from Aspen Trading, who described shorting VIX here as picking up pennies in front of the steamroller. And I thought about you, Alan. So are you not worried you're picking up pennies in front of the steamroller? Have you looked at that steamroller in the face before?
I'm not getting in front of this because I know how the VIX operates. There's always these short squeezes. There are always what I call VIX explosions. But what's important for me, I use the VIX as more of an indicator than anything else. It was when you see these VIX explosions, what happens afterwards? And you've seen time and time and time again. I think now, how many times did we shoot above 20? 20 is a very important psychological point. Every time it shoots above 20, it gets beaten back down. It's more like a whack-a-mole game that you see at the Chuck E. Cheese, that every time the VIX pops up, they beat it back down, and it gets beaten back down. And the overall trend, as the stock market trend for 10 years has been up, the overall trend for the VIX over the last 10 years has been down. We've seen a series of lower highs in the VIX.
Sure.
So every time it pops up, it gets beaten right back down again. So that's a positive sign. This range right now targets 10. So let's see where we are and how the market's reacting if we break this 12 level and get down to the 10 one more time. What that's going to mean for the S&P, that should be very positive.